But if you're not paying attention to alternative sources of information, you're going to get rolled by change. Either you roll with it or you get rolled by it. And the only way you roll with it is to employ a little bit of effort outside the mainstream.
This is Kaiser Johnson with our specials for the week of Cyber Monday from November 27th through December 4th, 2023, while supplies last. First, we feature 1/10 ounce gold eagles at $32 over melt with a minimum of 5 coins. Next, silver Nordic Mint 5 ounce bars at just $1.99 over spot per ounce with a minimum purchase of 10 bars. We also have 1 ounce silver 2023 Britannia at $2.69 over spot when you order 50 or more coins. And finally, Dealer's Choice silver 10 ounce bars are just $1.49 over spot per ounce with a minimum of 4 bars. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Welcome back to Liberty and Finance. We're always delighted to have this returning weekly guest. Andy Schectman is the CEO of Miles Franklin Precious Metals, and he's joining us for our weekly market update. We're recording it today, Monday, November 27th, 2023, for Tuesday, November 28th, 2023. Andy, thanks for coming back on Liberty and Finance.
Oh, it's good to be back. Hope you had a great Thanksgiving. Hope everyone out there is recharged and had a great Thanksgiving as we sail off into the last few weeks of what has been a crazy 2023.
We did have a very wonderful Thanksgiving. As we are transplants here to Florida, we had our first in-home house guests, visitors, 2 of my 2 sons that everyone here is familiar with, both Elijah as well as Kaiser and their wives and children. So 4 of our 13 grandchildren came to visit us and spend Thanksgiving with us. They're still staying with us. So if you hear some joyful noise in the background, you understand. And just wanted to remind everyone what we already know, and that is that we do have so much to be thankful for and so much to be grateful for. And that's one of the reasons that we're here. We're trying to help prepare and protect and preserve what we are blessed with and given thankful for. Not only our earthly treasure and our families that surround us, but the future that we look forward to provided by God, and anything that we can do to help educate each other, support each other, encourage each other along that pathway, and have a grateful heart along the way. We're trying to help as many families as possible. Andy, you're part of that, always giving us insight into what's going on so that people can take appropriate preparedness actions. As you've told us on many occasions, you can't prepare for what you don't see coming, and we want to make sure that we do see what's coming clearly. And we're not going to get that from the mainstream media or financial press. We're not going to get that from government statistics. We have lots of experts who have deep roots in the banking industry or in statistics, et cetera, who are telling us, yeah, you probably better not be trusting the government or official statistics and news, because there's so much spin that gets put on the news that we get that it can really get us either complacent so we don't take any action, or get us off in the wrong direction, or keep us going in the wrong direction. So we're here to get a more informed perspective that gives us a better chance of taking care of our families. And you're a big part of that. So you do a lot of research every week looking at what the major trends are in not only the retail bullion market, but also the world economies, our monetary direction that different countries are taking around the world, and how that might play out in ways that we can prepare for. So can you give us an update? It's been 2 weeks since we had you here. If you could give us an update on what you're looking at these last 2 weeks so that our audience can be appraised of that and better aware of what they can do to take care of their families.
You know, thank you for your kind remarks, and the feelings are mutual. Sentiment is mutual. You know, it's crazy. I understand a little bit differently now after taking some time off how difficult it is to stay on top of things. I mean, I told you last week, I said, and again, I'm just a little burnt. I need to take a little bit of time off. And taking a week off, I re-immerse myself and feel as though I'm completely lost. Like, I'm so far behind the 8 ball from taking 1 week off. It's taxing. It's mentally taxing to stay on top of everything and try to make heads and tails of everything. I give great credit to people who do what you do, who do what I do, who do what anyone who is trying to stay abreast and stay on top of what's going on and convey it in a semi-articulate fashion. It's very challenging to do so in a world that is as dynamic as it is, and it is mentally challenging. So it's good to be back. It's good to re-immerse myself. One of the things I was a little surprised about was that, yes, the world is still spinning rapidly, but it's also, I was surprised that there hasn't been as much development as I would have expected here leading into the end of the year. Maybe there's a little bit of time left before we see some of these things start to unfold, like, this short-term bank lending, rescue bank lending project that the Federal Reserve came out with. Well, all of these loans, and by the way, it's up to its all-time high, I don't know the exact number, well over $100 billion, but it all comes to an end in March. There's just a few months left before these loans, these emergency loans that were made to the banks in distress, have to be paid back. So things are coming. And I think it's emblematic of when I look at the last 30 years in this industry, the things we've talked about very often have come true. Never when we thought they would, and often much, much further down the line than we thought things would unfold. But when you base your decisions largely upon mathematics and economics and a sprinkling of logic upon it, old school logic at that, they tend to come true. But never when you think, or very, very, very infrequently when you think or how you think, what the catalyst will be. So we'll continue down this same, as I called it almost 3 years ago with you, a linear progression of events that are unfolding, and you can see them if you look closely. So let's talk about a few of the things that I've seen after re-immersing myself back in the fray, one of which is China and Saudi Arabia. I mean, to me, China and Saudi Arabia really are the key to very much of what I have seen or what I think I see coming. And look, you got more deals that are being struck between the People's Bank of China and the Saudi Central Bank. They just did a 50 billion yuan currency swap. It's an agreement, a swap. Let's talk about what currency swaps really mean. It means that trade can be conducted in local currencies instead of defaulting to the US dollar, instead of using the SWIFT system, as well as many of these countries have developed cross-border payments on something called Project M, as in money, M-Bridge, where these countries are able to trade their cross-border digital currencies amongst one another outside of the SWIFT system. And, it's basically a way for these companies to do business with more favorable loan rates in local currencies rather than if they borrowed money in US dollars, especially with interest rates as high as they are. We're seeing more and more and more of a push for these countries to do trade with one another in their local currencies. And if we go back to the end of the BRICS meeting in August, that's exactly what they said they were going to do. We are going to start trading, especially with energy, in local currencies, not using the dollar. Along those same lines, we saw Turkey, who has been in the news lately, obviously a little bit with what's going on in the Middle East, but also they were told by the European Union that, no, we're not going to let you in anytime soon, so you might as well look elsewhere. Well, that elsewhere, I believe, will be with the BRICS nations. And you have Russia and Turkey now that are developing what they want to be a gas trading hub in Turkey, where Russia is even talking about laying some more lines under the sea, gas lines, so that it could become Russia's main gas export route for Europe. And these agreements that are being made is emblematic, again, of logarithmic decay in the value of the dollar, in its trade settlement status, where little by little by little by little we keep chipping away at the dollar hegemony. And Turkey is certainly a country that I believe is moving in that direction. They were turned down by the European Union. They have become less Western friendly, and I think they are moving into this alliance with the BRICS. Venezuela, in and of itself, not such an imposing character, but they just said that they want to be a full-fledged member of the BRICS. You will see that happen. Why will you see that happen? Why would we want Venezuela in the BRICS if you're the BRICS? Well, they currently have 17.5% of the world's total oil reserves. And so you're talking a country that is resource rich. Look at all of the countries that have joined in the BRICS nations. They are all very resource rich. That is the key here. The first countries that will come on board will be those that control trading routes and or are resource rich. Pakistan has formally sought membership in the BRICS. And, here again, little by little by little, these are Western allies in a lot of the stuff that's gone on in the Middle East. We have used the assistance of Pakistan to help us with our endeavors, and now they want to join BRICS. They are finding safety in numbers. These countries, little by little by little, we are seeing more and more of these countries that are making a decision to find the safety in numbers, and you will see this, I think, really start to increase in an exponential fashion, where the first countries who were brave enough to stick up to the Western hegemony, that being Egypt and United Arab Emirates, and of course Iran and Argentina, these countries that are joining the BRICS, they will be the first of many. 27 other countries have formally expressed interest, Nigeria being another. Nigeria just said that we would like to, by the end of 2025, we want to be in the BRICS. You move Nigeria over to the BRICS and you have 80% of all the global oil and 75% of all the gas global reserves, globally reserves held in the BRICS nations. This is the drive that they are making. And I think this is something that, shouldn't be overlooked. Let's talk a little bit about silver. What we have been seeing in silver, I've talked a lot about the bleed down in the exchanges, in the silver market and in the gold market. But what we have been seeing is a lot of over-the-counter trading. And over-the-counter trading implies that deals are being done off of COMEX. The demand is being satisfied elsewhere, whether they're disintermediating and going directly to the mines, directly to the refineries. They are not going to COMEX. We are not seeing the bleed down in COMEX the way that we did in years past, although it is decreasing. I think once you get to a certain level, where you could argue we're already there now, you continue to bleed it down and it will create too much awareness of what is happening. But, you have the Silver Institute telling us that, again, we're going to have another massive shortage in mineable silver, which is about 1 billion ounces, versus demand. And that demand is increasing. In fact, the non-investment demand to 879 million ounces, if I'm not mistaken, is the highest level in history. So you have an increase in industrial demand for silver. And we've talked at length about how for the last 3 years, silver has been the primary focus of all of our sales. This entire industry has been selling silver far more than it has been selling gold. It's a situation where, you only have, according to these numbers, about 140 million ounces or so available for investment. Well, I think that if you were to add up all the investment that's gone on in 2023 across even the North American industry, I think it's far greater than 140 million ounces. But nonetheless, I think we are entering a period of time where the entities that are trying to accumulate silver are going to have to be far more creative. And when you talk about the Silver Institute's latest calculations, you have 60 million ounces that just disappeared into India in October. You had 10 million ounces that were imported into China in October. And, when you talk about Turkey's silver imports in 2023, almost 26 million ounces. Well, all of these ounces, where are they coming from? And a lot of it is not coming from the COMEX anymore. They are being more and more creative. They're doing things off exchange. They are disintermediating. They are pulling it off the exchange. And again, little by little by little by little, the silver and the gold supply are being drained by the biggest money in the world. And that doesn't even take into account almost 3.6 million ounces of silver that have been taken out, delivered out of the world's ETFs on Friday, just alone on Friday. So they're draining the ETFs, and you're seeing all of this gold and silver being quietly and really in a very opaque manner drained every which way they can. And at the same time, you have gold buying by the central banks, again, starting to accelerate. In the last 3 months, we've seen gold up buying by the central banks of 140% higher on average than we've seen in the last 5 years. 140% higher than the average of the last 5 years. In the last 3 months to September 2023, the top 33 central banks purchased on average 66 tons of gold per month, compared to 28 tons per month in the previous 5 years. And it's the same cast of characters leading the way. The one exception being Poland, which is interesting because they're number 2 on the list. China, Poland, Turkey. Here we are with Turkey again, de-dollarizing, striking deals outside of the dollar, working to join BRICS, buying lots of gold. India, Uzbekistan, part of the Shanghai or the Eurasian Economic Union, pardon me, Singapore, the Philippines, Russia. All of these countries accumulating copious amounts of gold and silver. And you'll notice that in this list, you don't have any of the European central banks, don't have any of the Western central banks with the exception of Poland. And I find that to be interesting. And I think, the bottom line is that the path that we are on in debt accumulation is not sustainable. And I think that, there is a point at which, I think people are going to start to really push back against the West, against their massive indebtedness and the ability to repay it. You take a look at the last Treasury auction for the 30-year Treasury, and there wasn't enough demand for what the Treasury was trying to sell. This is something that I think we will see much more of as there is less demand and appetite for U.S. debt as it continues to grow at an exponential rate. And I think, the bottom line is that when a company or a country or an individual takes on too much debt for a sustained period of time, it is going to face, if nothing else, a decline in its power and its authority. Let's see, what else can we talk about? We talked a little bit about silver on COMEX. We saw last week 1.4 million ounces of silver delivered. Open interest in silver is now 250% of all the vaulted silver and almost 1,800% of registered silver. Those are the bars available for delivery. In other words, it's 1,800% rehypothecated. So 1 out of 18 gets their silver bars when the rest get nothing if they all stood for delivery. And, look, at some point, the shrinking supply of silver coupled with the rising demand. Look, we're massive rising demand, the highest ever in industrial. We see huge demand for silver in monetary. There's been the articles written by the Pickaxe lately that I find incredibly compelling, talking about silver's use militarily. Now, we've talked about 500 ounces in the tip of a Tomahawk cruise missile many times, but the Pickaxe article is quite compelling, and it talks about a huge amount of silver being used in everything in the military industrial complex, from submarines to high-tech weaponry to ICBMs and all of the things that indisputably need a tremendous amount of silver. Something interesting to think about. A couple other things worth talking about. We did say that the Fed's emergency lending facility or funding facility hit a record high, $114 billion, and this money has to be paid back in March. As far as we know, that's when it ends. We saw another $3.3 billion in outflows. Over $1 trillion have gone into money markets since the Fed started raising rates. The question is, why would anyone leave their money in these banks when you can get 5% in a money market fund backed by the overnight reverse repo market of the Fed, essentially risk-free? the banks are in big trouble. And I know offline you were telling me about your interview you did with Gregory Mannarino, someone who I try and follow everything he's doing. And his concern is with the banks as well. I agree. The banks are in big, big trouble. They are massively over leveraged and undercapitalized. And the more that we see being drawn out of the banks, it's just going to put more and more stress on the entire system, which is one of the reasons why I think you see big money accumulating gold and silver. There's a term that you can basically say it's called inside money versus it is outside money. When you hold gold or silver, whether you're a country or an individual, if you hold it in your basement, you control your own finances. Or if you're a country, you control the monetary base. But when you hold US dollars, you have to hold those in a bank. And that bank is where the problems are. And I think you are not really in control of your money. You are at the mercy of someone giving you access to your money. There is a lot of stuff going on right now on the internet about UBS, Union Bank of Switzerland, and people are not able to retrieve their money, is the rumor. That their credit default swaps have gone much, much higher, meaning the risk involved with taking on some of their debt to offset that risk with an insurance policy is going higher and higher and higher. Tip of the iceberg, you see another one of these really big banks fall. What does it mean? The systemic nature of everything. Does it drag down the whole ship? Don't know. But I do think it's worth noting that, we're seeing all sorts of countries de-dollarizing. They're de-dollarizing their cross-border trade flows. They're buying gold. They're selling treasuries. This is all ominous for where we are ultimately heading. And I think that's really the most important thing to take away here is even in periods of calm like this, you do what the big money is doing. Don't do what the financial advisors are telling you to do. I think there's over $300 trillion in reasons to like hard assets. That's the global indebtedness, $300 trillion. And the systemic nature of all of this is incredible. You see a bank like UBS go down, it'll pull down a huge part of the whole system with it. So what Gregory is talking about is spot on. And you see a bank like Bank of America, which has been really centered to all of the shenanigans in the gold and silver market in 2023 with a horrible balance sheet. Can you only imagine what would happen if one of those banks, a big commercial bank in the US, were to go down? What would the ramifications be? Well, that's the whole reason to be doing this before it becomes obvious. And you can only hear so many people warning of this before it becomes, I think, on you to make a move and to trust your own intuition and your own gut. So I'll stop there and take any questions for you. I know I've rambled quite a bit. Look, there's not as much happening as I thought we would see over the last few weeks, but the year's not over yet, and I think it is becoming unquestionable, especially with the election and the bank lending program to end. All of these things are culminating in 2024. If I had to be a betting man, I would say 2024 is going to probably be the most interesting year in all of our careers, and I don't think in a great way.
One of the things I wanted to circle back on that you brought up there was this tidal shift of real assets, gold and silver specifically, to the east. You mentioned Turkey, you mentioned China, you mentioned India, you mentioned India. All of those countries, central banks and others buying precious metals hand over fist, whereas the Western countries seem to be doubling down in their debt-based financial model, which seems headed towards the dumpster fire of history. But we just interviewed a few weeks ago Carol Roth, the author of You Will Own Nothing, and she talked about the insidious plans that are being laid for us by the powers in the Western financial world to basically own everything, to own it all, and to leave us all just holding the bag of debt. And that has played out. Sometimes we've got a taste of that during the Great Depression. We interviewed Wayne Jett, the author of Fruits of Graft, Great Depressions Then and Now, about how the federal government, in collusion with the banks, etc., both deepened and worsened and lengthened the impact of the Great Depression, the outcome of which was impoverishment for many in the U.S., loss of countless small businesses, and the loss of many family farms and people being foreclosed on with their mortgages, having to lose their farm or that had been in the family for generations in some cases. So what's your view on that? If the model that's revealing itself now is that the Eastern countries, maybe emblematic by the BRICS Plus, are holding on to real assets, energy assets, gold, things like that, rare earth elements, etc. And the West, if the banking infrastructure is built on this house of cards of derivatives and debt, which will all implode, but if the Western populations have been suckered into this and are all in debt themselves, we've heard about record credit card debt on a household basis, etc. People maxing out not being able to afford homes now because interest rates are so high. So the interest rates are coming to hurt the ordinary people. Do you see us heading towards this big split worldwide, to where a lot of the people in the Western countries who don't take a clue from their brethren in the Eastern countries and hold on to some hard assets are going to be left holding the bag as far as this debt, and lose what assets they thought they owned, which was their homes, their businesses, etc.?
Yeah, read the book, The Great Taking by David Rogers Webb. It's 100 pages, and that's exactly what he's talking about. People, any debt attached to anything, you risk having it taken and forfeited. And he goes into great lengths to show this. It's a terrifying book. I'm about 80% of the way through it, and it's almost like you wish you didn't read it, because it's a little bit concerning and a little bit frightening. And your guest who said that this is what is being laid at our feet in a overt plan to take everything, it's not so far out of question, according to Mr. Webb. I would strongly suggest people read it. It's free, thegreattaking.com. Download it for free. Yeah, I mean, look, we have record indebtedness. We have $1 trillion in credit card debt, 17 trillion in household debt, record student debt of 1.6 trillion, which, as we've talked about ad nauseum, is the largest asset of the U.S. government. Record credit card debt, as I mentioned. We have, pretty darn close to the lowest level of savings ever. And, you have 65% of America living paycheck to paycheck, 45% of those people earning over six figures living paycheck to paycheck. I often talk about back in, after World War II and the Great Depression, these people worked hard. And let's just be honest, and I'm not throwing a stone here, but I don't think anyone, let alone the millennials, hustle as much as the baby boomers did. And these people put themselves through school. Kids nowadays, either they're getting student loans, which seem to be ever abundant, or their parents are wealthier than the previous generations were, and they're putting them through school. My dad always talked about the odd jobs he had to do in order to put himself through school, working in a shoe store where he met my mother, and put himself through school. And those things are gone. I think that we are not prepared to deal with that type of event. And, when I talked little by little, well, that's the way that these nations are de-dollarizing. They're smart enough to not make it overly transparent to the world that this is indeed what they're doing. And they're slowly, methodically draining the exchanges. As I said earlier, they're going off the exchanges now. They're disintermediating the traditional forms of taking possession of the world's commodities, whether it be through ETFs or going directly to the mines or whatever it may be. They are finding ways to be creative in which they are de-dollarizing and adding commodities to their portfolios. And by the same token, yes, I think that we will wake up to a reality that, these countries have accumulated all of the hard assets. You talk about this country wants to go green, yet the majority of all the rare earths are found on the Eurasian continent. The president of Indonesia, Nadudu, said we need to call for an OPEC-style cartel of rare earth metals. Well, Indonesia is one of the biggest hubs of rare earth metals, like nickel and lithium and all of the things that you need to build batteries. we're not prepared socially. We're divided as a country. We've talked about that a lot. Black, white, red, blue, vax, no vax, rich, poor, where you're defined by who you voted for in the last election. We are not Americans anymore. We're subsects. You're this, you're that. And cancel culture. You don't listen to what I have to say, screw you. I don't want to hear what you have to say. All of these things is not what made America great and enabled to stand up against adversity. And when you hear these things like the Great Taking, it makes a lot of sense to me, because we are not in a position to be unified to stand up and do what needs to be done to fight back against that. And it's happening in such a manner where, people in this country have no clue about why you would want to own anything other than traditional assets. And they're going to be run over by what comes. And if indeed we do see that moment where, it goes from little by little by little bit to all at once, when the switch gets flipped. And I've always said, I've been very consistent, I believe it will be Saudi Arabia and OPEC announcing that the dollar is not the sole settlement currency for oil anymore. And in that moment, everything that we've talked about becomes crystal clear. So, I think what you are basically saying is little by little by little, then all at once. It's logarithmic decay. These countries, these Eastern countries, are doing it in a manner whereby if you are not paying attention to Dunnigan Kaiser or to any of the people on your show, and maybe even myself included, maybe, we'll see, I guess history will say. But if you're not paying attention to alternative sources of information, you're going to get rolled by change. Either you roll with it or you get rolled by it. And the only way you roll with it is to employ a little bit of effort outside the mainstream. And like I said at the beginning of this conversation, it was so liberating to take a week off and let my brain decompress. Spending as much time as I do, and I know as you do, every single day, preparing, reading, researching, trying to connect the dots. It's really difficult, Dunnigan. And it's really tiring, and it's mentally taxing. I get it. I truly do. I mean, I have to speak to, 4 or 5 or 6 of these a day most days, like you, and sound articulate and try not to say the same thing. Yet there's a path that I have to follow. I cannot deviate from. And as I'm walking that path of de-dollarization and the ramifications that it has for all of us, I see things, signposts along the way that catch my attention. And maybe I am learning more and more about less and less till I'm focusing on just about everything, about nothing, or maybe it's everything. To me, what has made this country special and what it is, aside from all of the social aspects that I talk a lot about, is the fact that we are the world reserve currency. And as a country and as an administration, we are doing all we can to disrespect that. And it's going to end. And when it does end, I think the outcome will be horrific. And yet I am a very distinct minority when you talk to people who are supposedly articulate in finance. The mainstream just laughs at the fact that the dollar could actually not be the center sole reserve currency of the world. That at some point people aren't going to say it's just enough is enough. And I think if you really pay close enough attention, and you can see what's going on with the BRICS and all of the trade outside the dollar, it's already happening. These countries are saying enough is enough. So I guess we'll have to see how it all plays out, but I beg people to take a step back and realize I'm not telling you to buy gold and silver to get wealthy. It is wealth. And the biggest money in the world is going to great lengths right now, to hide their acquisition of it by going around the mainstream, going around the exchanges, doing things that are very clandestine, like taking money out of the ETFs, like SLV, like PSLV, like going directly to Keith Neumeyer and taking possession off of the mines instead of going to COMEX, where the spotlight is shining. And I think you will see this will continue until there just is no more commodities. There are no commodities left to be sold at these make-believe prices. And then like that, everything changes. Now, we're not there yet. And until we get there, most people will say this is impossible. And then when it happens, they'll say, how did I miss that? And you and I have been here talking about it forever. So I don't think we're at the 12th hour yet. but it's getting closer for sure.
Yeah, for people, ordinary folks like our audiences who have been watching us and trying to do the right things prudently, proactively, systematically, in a deliberate and strategic manner to help provide for their families now and in the future. You often work very hard to come up with weekly specials that help make that more affordable. Do you want to touch on those before we wrap up?
So we do, and we've got 4 specials. Silver Nordic Mint, 5-ounce bars. They're really nice. Brand new, $1.99 over spot. We have 1 10th-ounce Gold Eagles, minimum 5 coin order, $32 over melt. Take the price of gold, divide it by 10, and then add $32. 1 ounce 2023 UK King Charles Silver Britannias, $2.69 over silver spot, 50 coin minimum order. And dealer's choice 10-ounce bars at $1.49 over silver spot.
Very well, Andy, and always grateful for your insights here. Thanks for coming back after your Thanksgiving and repair week to come back and give us a fresh take on where things are headed. We'll continue to reach out to you. And next week, I believe we're going to do this live stream. So folks, start thinking up your questions you want to ask Andy live next Tuesday, December 5th. And we'll look forward to regrouping here, 9 p.m. Eastern and 6 p.m. Pacific next Tuesday live. And Andy, thanks for being here again on Liberty and Finance.
I'd love to do an extended one too. And I don't know if I'm allowed to say that or not, but we always seem to never get all the questions answered. So I will clear my schedule Tuesday night. And if we're able to go over it, great. Answer all the questions. It will be close to the end of the year with the holidays coming up. And I just want to tell you, I'm very thankful for our friendship and our relationship. And again, I'm very proud to be associated with you and to have you associated with Miles Franklin. It is a great honor. And in the spirit of Thanksgiving, I just wanted to give thanks to you, to your boys, to your family, and everyone out there who continues to listen to my ramblings. I do the best I can to be as sincere and honest as I can about what's coming. And it's just great that you give me a platform to chat on. So I thank you. I'm thankful for you, and look forward to doing a live stream with you and everyone else next week.
Wouldn't have it any other way. Thank you, Andy.
You got it, my man. Stay well.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.